My name is Victoria MacLean. I'm an Associate Portfolio Manager on the fund, and I am joined by Dr. Julia Creasey, Group Sustainability Director at Croda, which was one of the examples you heard Claire talk about. Julia has been responsible for the team that is really driving the sustainability agenda at Croda in terms of developing the strategy and setting some of the ambitious targets that we're going to be talking about today. Julia comes with a wealth of experience both at Croda and in academia, and we are very lucky to have her joining us, so thank you. We've already heard a little bit from Claire about Croda, but maybe a useful starting point would just be a little introduction from you about the business.
Yeah, thanks, Victoria. And hi, everybody. Thank you very much for having me here today. So I'll just give a really brief introduction to Croda for those of you who don't know, although Claire did a great job just a few moments ago. So we're a specialty chemical manufacturer. We supply ingredients to our customers that are formulated into their end products at really low dosage levels, but that provide a really important performance effect. We supply into two key sectors. That change? Oh, there we go. We supply into two sectors, so we supply into consumer care and life sciences. We're pure play consumer care and life sciences because earlier this year we completed the divestment of the majority of our performance technology sector. And you can see the different businesses here that we have up on the screen. So starting with consumer care, we have our sort of traditional beauty care and beauty actives business. So there we're providing ingredients into skin care and hair care, and also active ingredients like peptides for anti-wrinkling. But we've expanded that portfolio with the acquisition of Iberchem, so that's given us fragrances and flavours as well. And what that means is that then we can provide our customers with a much more complete portfolio to help them with their formulations. And we have a home care business as well in the consumer care sector. And then life sciences, we have pharma and crop. These two businesses are really kind of broadly independent of the kind of macroeconomic environment as well. And then on this side as well, what you can see at the bottom is the kind of minimum attributes that any business needs to have to be included in this portfolio. So that's growing at 1.5 times market. Return on sales are greater than 20% and a return on invested capital of more than 2 times. So, and that's really the minimum for inclusion within our portfolio. So you can see our strategy here. We really believe that growth comes at the intersection of sustainability and innovation. And Victoria and I are going to talk a lot about the sustainability part of our business. It's really important to us. There's a lot that we can do there to support our customers on that transition to net zero. And in terms of innovation, there's a lot of kind of collaboration going on in big bet projects, things like the move to biotechnology. On the right-hand side of the slide, there are strategic priorities, but what's really fundamental here is that everything is driven by our purpose. We talked earlier about purpose-led companies. So our purpose is smart science to improve lives, and it really guides all of our strategic decisions. And then in the inside of the circle, sustainability and innovation are really our differentiators. So at the beginning of 2020, we launched our commitment to be climate, land and people positive by 2030. This is a really, we also set the ambition to be the leading, the most sustainable supplier of innovative ingredients. So we set some really ambitious targets working with the Cambridge Institute for Sustainability Leadership. And in setting those targets, we focused on the United Nations Sustainable Development Goals. So we really thought about, not just at the goal level, at the 169 targets, which of those could we really directly contribute to? And so you can see the priority goals there on the screen. Those are the targets that through our strategy and through the use of our ingredients, the impact that our products can have, we can really directly contribute to. And our climate, land and people positive ambition is supported by our fundamentals. So here we have lots of targets and really give us our social license to operate. So things that we've done for a long time and things that are really important to us and we want to improve all the time, things like safety, quality assurance, product stewardship, they sit within our fundamentals as part of our strategy. And just to finish off on this quick introduction, just a few highlights and kind of how we're demonstrating sustainability leadership this year. Earlier this year, we announced our ambition to be net nature positive by 2030. So we're really wanting to take a leading position around nature, understand what our impacts and dependencies are on nature so that we're there ready to support our customers once the science-based targets for nature are released, once TNFD comes in, we'll be there with that data for our customers and showing them how we can have a positive impact on nature. And we know we can't do this on our own, and collaboration is really, really important. So we recently, just earlier this year, joined the World Business Council for Sustainable Development. And that's opening up loads of opportunities for us to partner with other leading companies in sustainability. We'll talk a bit more, I've got a case study a bit later to talk about our biosurfactants, but actually, we have a plant now in the US where we're able to supply our customers with 100% bio-based surfactants, really help them with that transition away from fossil-based ingredients. And we have an ambition to do more there, to scale our capabilities, to partner with others around the world to be able to provide our customers with 100% biosurfactants globally. And the last thing on this slide is that our positive impact on with our positive sustainable sourcing. So we're members or founder members of Action for Sustainable Derivatives. That's an industry collaboration working on sustainable palm. And we're supporting a fund there which is helping smallholders on the ground with their agricultural practices to be more efficient, to help improve their livelihoods, but also to have a positive impact on nature. So I'll stop with the introduction there. And
great,
back to Victoria.
Thank you. And really great to see Unilever there as an example. We saw that on Seb's slide with 58% of emissions coming from raw materials and ingredients. So maybe this is a good place to dig in a little bit more. And you mentioned biosurfactants there, into how Croda is helping address companies like Unilever's supply chain and raw material challenges when it comes to carbon emissions.
Yeah, absolutely. So so there's two real focus areas, particularly for our consumer care customers when they're sourcing raw materials from us. The first one is, as you say, that move away from fossil-based ingredients and the move to bio-based ingredients, because, as I've mentioned, obviously, those ingredients, as the raw materials are growing, they're taking carbon out from the atmosphere, sequestering carbon, and overall are carbon neutral. So there's a big drive to do that, to make that move. We already have an industry-leading position, but we have a target to get to 75% of our organic raw materials to be bio-based by 2030. And to do that, again, it's I've talked about the biosurfactants as an example, but we're looking for key raw materials, where there are alternative bio-based alternatives to petrochemical. We're partnering with suppliers. We're looking for opportunities to make those switches. But a big part of it is innovation as well. So how can we use biological routes to get to our products? Things like biotechnology are going to open up a lot more options to fossil-free ingredients. And the other key focus is on the carbon footprint of those ingredients that we supply. So, we have, at Croda, we have a science-based target, and we have a target that's focused on our supply chain emissions, because most of our emissions sit within our supply chain. And as Seb's shown, when we look at Unilever, and most of our downstream customers, even more of their emissions lie within their supply chain. So they need their suppliers to be able to reduce their emissions, to help them reduce their supply chain emissions and achieve their targets. So we're spending a lot of time thinking about how we do that and how we support our customers. We have an industry-leading Scope 3 inventory currently. So we have very granular data on those emissions associated with raw materials that we're sourcing. We have life cycle assessment data attached to over 70% of those emissions. So we're not relying heavily on spend factors, which is the case for some companies. But we know we need to go further than that. The next step is that primary data from suppliers, so that as we engage with suppliers, we encourage them to reduce their emissions. We can see that coming through in the numbers, live and dynamic numbers rather than life cycle assessment. So that's the next step. And then what we can do is take that data attached to our raw materials and obviously include our operational emissions and provide product carbon footprint data to customers. In terms of our operations, we are still, more energy intensive than our customers, and we have decarbonisation roadmaps in place at all of our sites, mapping out how we'll achieve a 50% reduction in our operational emissions by 2030. And of course, then what that means is in this product carbon footprint data, we can map out to customers, if you stick with us as a supplier, by the end of the decade, your product carbon footprint on average will be 35% lower when you take into account our two different targets, our supply chain and our operational targets. So So that data is really important to customers, and we can really add value and maintain a competitive advantage through that decarbonisation that we're working on.
Yeah, and I think that that data point in the life cycle analysis is definitely something that I'd like to come back to. But I think also on the impact side, I think what's really interesting about Croda is that it has a sort of multifaceted impact, if you like, because it's got that you're replacing fossil fuel-based raw materials, but there are also often positive impacts in use. So maybe it'd be useful just to highlight a couple of examples of where you've got that kind of dual impact, if you like.
Yeah, absolutely. So I mentioned that we often include very low dosage rates in a formulation, but actually we have a really important performance effect. And what you can start to do then is quantify that performance effect in terms of avoided carbon emissions, the sustainability benefits. And so we've started to do that. We have some, in fact, Claire showed the slide earlier, so we have some avoided emissions case studies where we've quantified those savings, and I'll take you through a case study in a moment. I think what's important to say there as well is that it's not just about finding the existing avoided emissions, innovating here and working with our customers to understand those shared downstream emissions that we have, particularly in the consumer care space, and how we can work together to reduce those. So that might be through consumer education, or it might be through, what's the right form to supply our product to customers to help them with their energy efficiency, or how can we find a new application that's going to reduce emissions in use. There's lots more that we can do here, and we feel like this is an area of real opportunity for us. I noticed on Unilever's diagram it didn't include customer emissions, and actually those downstream use phase emissions is a big challenge that we have to tackle there if we're going to achieve that net zero transition. If you allow me, I've just got a case study on another slide, just to talk through an example of one of these benefits and use case studies. I think a nice example, and actually Seb showed a slide on clothing, so that actually was quite timely. This case study was really a holistic case study to look at the upstream and downstream benefits of ingredients that we supply into home care. So the two separate ingredients that go into kind of fabric conditioner, we have the bio-based surfactants here on the left-hand side that we've kind of talked about already, but what we can do is quantify those emission savings that our customers are already receiving when they switch to our 100% bio-based range of surfactants. So you can see I think it's an 11%, I can't read that, an 11% carbon footprint reduction immediately by switching to the bio-based alternative. And actually the manufacturing site where we're producing those bio-based surfactants is already using renewable energy, renewable electricity. We take landfill gas. And so since 2018, which is our baseline year, we've been able to demonstrate some further carbon footprint reductions and provide that data to customers. But we're going to do more there. So by 2030, when we've achieved our science-based target, they'll have a lower carbon footprint. And actually, if we can move away from corn to alternative feedstocks for our bio-based ethylene oxide, then we can see much bigger reductions. But that's the upstream part. The benefits and use case study here is actually thinking about a novel biopolymer that goes into fabric conditioners. And we can demonstrate that including that biopolymer in a fabric conditioner extends the lifetime of clothes. It enables clothes to be washed twice as many times before they show the same level of colour fade or fabric damage. And so, again, including really, really low dosage levels. So 1 kilogram of Croda ingredient is protecting 195 kilograms of clothes over their whole lifetime. That's every wash. What we've had to do is factor into this case study is some consumer behaviour, because clearly not every piece of clothing gets thrown away because it's reached end of life and can't be worn anymore. We know that's not the case, and fashion, just taste, styles, etc., that all plays a big part. So we looked at a lot of consumer studies and consumer research, and we applied a conservative kind of 10% factor in there. So we're saying 10% of clothing would be worn for longer if it wasn't damaged, if it wasn't faded. And so that means that including our biopolymer into the fabric conditioner would actually avoid the manufacture of nearly 20 kilograms of clothing, 1 kilogram of our ingredient, and that equates to 500 kilograms of CO2 saving associated with the additional clothing manufacture. So actually, the benefits, the opportunities, we know that we could actually double the lifetime of clothes. So there's a huge potential there if we can enable that consumer behaviour change that's so essential to this net zero transition. So yeah, just one example of how our ingredients work.
It's a great example, and I think we all just need to be more like Seb and wear our suits for for a few years, and Croda will help us do that. That was a really useful illustration, and I think maybe moving to some of those targets and how you think about data, maybe a useful place to start would be just to define what you mean by land and nature positive in terms of those targets that you've set. What does that mean?
Yeah, so when we launched our commitment, we said, we want to be land positive at the time. And the land positive target was really important because we've just talked about, the move to bio-based being an important part of climate positive. Clearly, sourcing bio-based raw materials means that we're going to have a greater impact on land use upstream and, water use in growing those raw materials and nature impacts. So it was really important for us to think about how we could become land positive, and what we've done there is our big focus is on our crop protection business and how actually downstream our ingredients can save a lot more land than we use. And when we set the target, we weren't sure where we were, but we were already land positive. Actually, once we've done the calculations, and the use of our ingredients saves more land than to grow all of our raw materials. But we want to do more. We want to save an additional 200,000 hectares by 2030, and that's through new innovation. That's not selling more existing product, that's new innovations. So that we can really do that through, in crop we can help reduce spray drift, so help the pesticide stay where it needs to, help with adjuvancy, help it get into the leaf more quickly. We can look at coating. We have a seed enhancement business, so we coat seeds, which can help obviously improve yields and reduce pesticide use. And then some of the other areas we're focusing on there is, how can we help, talking about the kind of adaptation piece, how can we help grow on degraded land? How can we help crops be more resilient? So there's a lot of innovation going on in that space as well. So that's really what we're doing on land. And then nature, it really, we think that's where our biggest impacts and dependencies are going to be on nature, in the sourcing of our raw materials. We're doing the work now to identify exactly where those hotspots are, and we're using life cycle assessment, and we're following the Science-Based Targets Network kind of guidance on nature. What we'll be doing, again, is focusing on that innovation downstream, working with customers and working out how, once we understand exactly where our impacts and dependencies are, what actions can we be taking to move to a positive impact.
And I think it's really useful that you highlight there that you can already be at the land positive targets, but you want to use innovation to get beyond that. It's not the case that, for example, with the emissions targets, the emission savings are there, you've just not reported on them. You're actually innovating to drive further emissions savings. And I think one of the helpful things from our perspective as impact investors is all the data you produce from the life cycle analysis, and now you're talking about getting data directly from suppliers. Maybe just a couple of illustrations of how you've been approaching that, and maybe what some of the challenges are around getting that data and doing that kind of level of reporting, and also a sense of how much maybe of your portfolio or your total emissions that type of detailed assessment covers. So we have one of our other targets is to have full life cycle assessment for 100 of our key ingredients. And at the moment, we've started that work. We've got resource in place. We've got the capability, and we are, we've developed our own tool with an external third party, and so we're able to do those cradle to grave life cycle assessments, which is already providing us with real insights into where we should be innovating in terms of next generation ingredients, and helping us in that customer collaboration to understand those downstream impacts, as we've just talked about. That won't cover our full portfolio, because what we're doing there is we're sort of focusing on key ingredients where either we're getting customer demand for that data, or where it's going to really support our innovation teams. So we are looking to provide product carbon footprint data for our full portfolio using a more streamlined methodology, just focusing on carbon and gathering that data from our supply chains we talked about. So it's important that we obviously align with ISO standard methodologies. We have external verification on all of our emissions data, and the benefits and use case studies that we've talked through are externally validated as well.
So I think, we've got robust methodology in place, tools in place, we're resourcing to support, and it's just about that kind of supplier engagement and customer engagement. It's not our operational boundary, that data we can access really easily, but that's not the bit that is most important. So it's just that kind of, collaborating up and down the supply chain.
Yeah, but definitely from our perspective, Croda's sort of leading the charge on that, even doing cradle to grave. A lot of what we see is more cradle to gate, even when companies are doing life cycle analysis. So to go to that extent is great from our perspective. Maybe we could talk a little bit about how this approach resonates with customers. Is it something that they are recognizing the value of, and do you see this as being something that contributes to the growth opportunities or Croda's competitive advantages?
Yeah, absolutely. I mean, we've seen, Unilever have a target to have 100% fossil-free cleaning ingredients. So as an example, all of our key customers have stretching targets in this area, and they're looking to their suppliers to help them. Actually, what we're seeing is that, to maintain that competitive advantage, you need to do more, because actually it's becoming a license to operate in some cases. Some of these data points, you can't be a supplier anymore unless you're able to provide some of this data and you're doing the right things and you have the targets, you have the science-based targets. So we're constantly thinking about what's the next thing to maintain that leadership position. And I think nature's a good example of what we're trying to do there, is to be ready for our customers and stay ahead and have that data for them, and be doing things to progress in the right way. But I think actually, yes, it absolutely does give us a competitive advantage, and I think that innovation piece is the most important. How can we work with customers to for the next generation of ingredients that are going to solve and tackle the problem, these global issues that we're all facing.
Great, and we were chatting about this a little bit earlier in the break. Some comments in Ben's section about what some of the challenges were, and it actually being around talent and having the skills set. How is Croda seeing that as a bottleneck, and what's Croda doing around skills and talent in sustainability?
Yeah, no, absolutely. I mean, what we find, thinking about the conversation we had, we definitely are attracting talent because of our sustainability strategy. We definitely see people coming and wanting to work for Croda and be part of what we're doing, which is fantastic. But yes, I mean, what we're finding is we're working at the moment to understand what those competencies are. What do we need? What skills do we need to really deliver on our sustainability commitment? How do we build those into job profiles and build those into the recruitment process? It's going to be really important for us. So one of the things that we're doing is developing an internal sustainability academy, so that we've got a training scheme for all of our current employees. But certainly, we need to think about how we bring the right skills in that, that's going to help us deliver. Traditionally, Croda's really been made up of chemists, which, we still need a lot of chemists, but actually what we're finding now coming in to join the sustainability team is we're getting, people with a geography background or, different skill sets that can come and help us. What we need to deliver on our commitment is we need different skills. So so we're still identifying exactly what those are and mapping that out. But it's going to be a big part of what we do from a recruitment perspective moving forward.
Great. And on a slightly different topic, I think one of the areas that we're quite excited about, and you had a recent investor day on, is the healthcare side, where the end market is clearly very impactful. But maybe it'd be useful just to understand exactly what Croda is doing in the life sciences space within healthcare.
So what we provide are the kind of drug delivery systems. So for mRNA, our lipid nanoparticles kind of coat the mRNA and help it get to where it needs to. So that's the part that we played in the COVID vaccine. It's those delivery systems. And the other kind of focus area as well from the pharma side is adjuvancy. So again, if there's an adjuvant in a vaccine, then it can really help the efficacy of the active ingredient, and it can help the body's immune response. So we've got those two kind of focus areas. Pharma's really exciting because, we have a target to be part of kind of 25% of the World Health Organization listed sort of vaccines for their kind of priority diseases. And so there's a lot of collaboration going on with customers at early stages. And actually what we're finding is that mRNA is looking like there's going to be a lot of opportunities beyond COVID for mRNA, so things like cancer treatment. So through that innovation with our customers, we think that, together with the delivery systems that we can offer and through that innovation, there'll be a whole new generation of drugs that will be opened up that's going to really help us have that kind of people positive impact on society that we're aiming for.
And is that the main sustainability goal? Is that linked to the 25% of vaccines?
Yes.
Yeah.
That's where we're focused. That's where we see the real link to the Sustainable Development Goals on, communicable diseases.
And is the raw material challenge there similar in that you're helping customers switch away from fossil fuel based, or are there different raw material challenges within the healthcare business?
Yeah, the move to biologics is something that is there, but it's not the same as for consumer care ingredients in terms of the customer demands there. But we see overall a lot of the same sustainability requirements as a supplier. So there's quite a lot of synergy there between the way the different businesses work. Things like carbon footprint. But yeah, it's more on the performance of the ingredients at the moment, definitely in terms of what how we can have a really effective vaccine or drug.
And so the impact there would be quantifying, if you had a vaccine without your ingredient, how effective would it be with the vaccine?
Yeah,
with the ingredient.
Absolutely. For example, adjuvants can extend the shelf life of vaccines. So that's another example of avoided emissions because, if we're not having to, the pharmaceutical actives are very carbon intensive to manufacture. So being able to make them more effective or to extend their shelf life has a big benefit in terms of avoided emissions.
Yeah, and I guess storage for the next, hopefully not pandemic for a while, but we can store that.
Yeah.
Great. Well, unfortunately we're running out of time for this part of the Q&A, but we do have time for questions from the audience, and I think Seb and Claire are going to join us for that.
I'm with a company called Supernova. We're democratizing access to sustainability data. I have a question for WHEB. In a lot of your investment thesis for the companies that were very well presented, a price premium on the sustainable alternative, a price premium on the sustainable product was a core of what made the company interesting for you as an investor. How do you square that with the need for these products to be scaled mainstream in a world that is getting more expensive by the hour?
So it's a great question, and we often discuss kind of the tension between having to invest in companies that are high quality and that can pass on things like cost inflation to their customers. From an investment perspective, that's really important. But of course, as you've alluded to, it's also important for us to be able to scale these technologies, and particularly on the social side, we want to make sure that the best healthcare, the best technologies are available to everyone, and they're not just available to the wealthiest parts of the population. The way that we think about that is essentially, in order for companies to continue to innovate, they have to continue to make money because they need to be able to invest that back into new technologies. And so we do need companies to be profitable, not just because we have investors to think about, but also because we need to think about how they can be sustainable businesses over the long term. But we do also engage with our companies, particularly on the social side, to ask them, how they are making those technologies available to everyone. So, for example, in the pharma space, we might talk about their drug pricing policies, what they're doing to enable access to healthcare in emerging economies. And so it's kind of, that side of things is kind of led from our engagement and our stewardship of an investment, so that they are both making money and returning that to shareholders, investing in new technologies, but also, I guess, taking it upon themselves to make sure that they're being responsible citizens of the global economy and making that technology available more widely as well. I don't know if anyone has anything to add to that.
Yeah, I think there's also maybe with the Croda example, there's a number of things there that, if you're replacing fossil fuels, you are saving a cost that at the moment isn't being factored in. So it's not just a case of everything's getting more expensive. For Croda's ingredients, it's a small part of the overall cost with a significant efficiency saving from an emissions perspective. So I don't think it's necessarily just as black and white as prices are going up and everyone has to pay more. It's what the types of companies we're looking for is where there is a value add that is justifying a higher price paid, and it's usually, hopefully compensated for by a positive impact in a different way.
Hi, thank you. I'm a journalist at Environmental Finance. I just had a question. I think Claire mentioned that there might be some turbulent prices in plastic ahead. And I was just wondering at WHEB, oh, thank you for your presentation, by the way. I was just wondering at WHEB, how turbulent do you think these prices will be? And how are you preparing for that risk? Other than maybe like making investments in sort of plastic recycling companies. For example, like some investors are being called on to like categorize plastic as like a liability rather than an asset unless it's being recycled. So I was just wondering what you made of that and yeah, how you're preparing for turbulent prices.
Yeah, that's a great question, thank you. And yes, so as we mentioned earlier, TOMRA in particular has seen, well, we have seen elevated prices for recycled plastic in particular. I think that the way, as impact investors, we are predominantly focusing on finding a solution to the plastic problem. And we think that recycling is, a great solution to that because plastic does have its uses. I know we often think about plastic as a plastic bottle or those plastic straws we're getting rid of, but it's also found in a whole load of, circuitry protection, industrial uses. So plastic is actually an important material. It's a useful material, and we're never going to be able to replace it entirely. So yes, to answer your question, we are absolutely investing and looking to invest in companies which are partly providing the solution to that by recycling plastic, which should see positive economics as with TOMRA because of the demand for their machinery, because of the prices that they might be able to get for the recycled plastic. And we have seen some really innovative companies, not ones that we are necessarily ready to invest in today, but which are specialising in quite novel recycling technologies like chemical recycling to help to break the plastic down to its absolutely core molecules, which is much easier to then turn into a new product which is as strong and structurally stable as the first one. And we've seen a whole load of kind of companies come to market as well in kind of bio-based, biodegradable plastic. That we still think has a lot to prove. There's still studies that need to be done to prove that this plastic can actually biodegrade in different climates in a reasonable time frame. But that's definitely something we're monitoring. And as those companies become more mature, I hope that it would become a more attractive investment from a financial standpoint as well.
And I think to your point on liabilities, I don't think it's necessarily something we record as a liability, but we try to record negative impacts from the companies that we're investing in as well, where we think they might have them. One of the examples is in healthcare companies where they have sort of single-use plastic. That's something that we try and think about and engage with the companies on what they're doing about it. And I'd say the best companies are thinking about it from the product design and innovation stage and trying to figure out for their new products how they can think about that entire life cycle and end of use stage of the product. And one example is Fisher & Paykel, which is a company in New Zealand that does the ventilation or parts of the ventilation machines that are used in hospitals. And they've got a sort of prototype of a robot that can take it apart into its different types of plastics, recycle and take off the bits that are needed to recycle. So the best companies are thinking about it from the product design stage as well as trying to address the current stage of the problem.
Well, if there are no more questions, I think we're having another coffee break. Is that right now, George? So thank you very much.
Thank you very much.